Hello and welcome guys to the fourth episode of the ICT Core Content Topical Lecture Series. Today I wanted to go over the 4 conditions in the market to frame environment selection. Okay, so we've got expansion, retracement, reversal, and consolidation. Expansion, delineated here by the red and green arrows. This would be a buy side expansion, and this would be a sell side expansion. Okay, so expansion going lower, expansion going higher. A retracement would be after we've got the expansion higher, we see this retracement back into this leg of this expansion higher. Okay, opposite said, for bearish example, we see this expansion lower, followed by this retracement into the expansion leg. Okay, then we go to reversals, and reversals are seen by this pattern. This is just a skeleton of the pattern. This can look in many different ways, but this is just a schematic example of it. We've got this expansion, retracement, expansion, and then we've got this reversal, okay, trading below this recent retracement's low. Okay, then the opposite said, for a bullish reversal, we see expansion lower, retracement, expansion lower, and then a reversal, okay, higher in the form of expansion. And then we've got consolidation over here. The reason it's all just in black is because it doesn't matter buy side or sell side, up or down. What we just know about this condition is that it is just a range bound condition, not making any significant highs or lows. Okay, this would lead on to time distortion, which we will get into in future topical lectures. So important notes: all markets start from consolidation and move into expansion. Think about the open, high, low, close topical lecture, which I'd hope you'd watched before this. These 3 conditions, sorry, I should say 4. These 4 conditions are interchangeable depending on the sequence of events. The previous condition will give you insight into how the following condition will form. So what I mean by this is consolidation always leads to expansion. After expansion, we can expect consolidation, retracement, or reversal, and so on and so on. Okay, so how one condition forms will let us know how the next condition forms. Okay, so this can give you great insight in the market. So if we move on to now a schematic example over here, we can see that I've drawn out consolidation. Okay, all markets start from consolidation. We move into an expansion, and then we go into consolidation again, followed by a retracement back into this leg of expansion, back into the consolidation, and then we have another leg of expansion followed by our reversal pattern, okay, and then a retracement up into this expansion leg of our reversal, and then we go into potential consolidation. All right, now to give you a chart example right here, and also incorporating the open, high, low, close concept that I'd spoken about in one of the previous episodes, and really just showcasing the conditions, but also how you can combine this. Okay, and I have added the times, as we are basing this open, high, low, and close off the intraday expansion. Okay, the intraday power of 3, bearish power of 3, as we can see here. Okay, from the open at midnight to the close at 1600. All right, but don't worry about these times too much, and the specifics and elements of time, we'll get into that in a future lecture. So let's just look here. Okay, we open, we consolidate, and then from consolidation we go into expansion. Okay, then we have our high of the day here at 9:30, and we sweep these buy stops of this high, and then we go into our reversal and have our reversal pattern. Remember I said that was just a skeleton, and it can form in many different ways. All right, and then from our reversal pattern we go into expansion, creating the low of the day, and then we have our retracement. Okay, our retracement going into consolidation into the close of the day. Okay, and this would give us our open, high, low, close for the day. All right, and we can also frame this in a power of 3, where we've got power of 1 consolidation, or AMD, you know, the accumulation. We've got power of 2, the manipulation, and then we've got power of 3, which is the distribution. Okay, so just a real quick, simple video today, very easy to understand a topic, I just wanted to also incorporate some other things to hopefully continue to build on your understanding, as that's what the whole point of this core content series is about. Okay, so in the next episode, I should be going over premium and discount and OTE and dealing ranges. Okay, so looking forward to seeing you guys in the next one. When I speak to you then, take care and ciao.